Hey everyone, Charlie Man Dan here. Hope you're having a good weekend. Looking at Twitter today on the daily, weekly, and 15-minute time frames. This is the daily time frame where each candlestick represents one trading day worth of action. After a promising start to the week, Twitter closed above this middle Bollinger Band, but that was not able to maintain as support, and the bears stepped in, knocked it back down, turning it back into resistance. You can see that happen this day, and then again the bulls tried, and the bears stepped in, knocked it back down below, keeping it as resistance. And again on Friday, it closed right at this level. 37.60 is the middle Bollinger Band, and that's what the close was. So there's definitely a battle going on between the bulls and the bears over this middle Bollinger Band. It's a significant level as the bulls need to get above it to be trading in the upper Bollinger Band bullish channel. Otherwise, the bears are going to take over, and this double bottom here is going to be tested. You do have the 10-day moving average support coming up. That's 36.97. So if maybe that can curl up a little more and provide some support to finally get the bulls to take it over this middle Bollinger Band. So that is definitely the level to watch going into next week. Looking at the weekly time frame, you can see you have the two hammers here signaling a possible bounce. And it looked like to start the week that we were going to have confirmation of this bullish reversal with a nice green candlestick. But with those bears stepping in midweek and to close the week, it is an ugly looking candle with, you can see the bears knocked it back down, took away all those gains, and we are still waiting for some confirmation of a bullish uptrend because this candlestick is definitely not doing it. Zooming in on the 15-minute chart, this is a 4-day 15-minute chart where each candlestick represents 15 minutes worth of trading, and you can see the 4 days here, on the x-axis. You had the high set here, then a dip, a higher low, was set, a lower high, and then a higher low again. So it's definitely tightening the range. As you can see, a pennant is forming and a move is imminent. The Bollinger Bands are tightening. We've got resistance all converging around this upper 37 level. And again, that you can see on the daily chart, I pointed out 37.60 is the middle Bollinger Band, and look on the 15-minute chart, that's exactly the level we're watching here. At 37.60, you can see that was the support on this pullback right here, hit 37.60, bounced, hit the 50 period resistance, pulled back again, held support at 37.60, and then in the end of the day on increased volume, the bears tried to knock it down below this level, bulls bought it back up, and it closed directly at that level. So 37.60 is an important level on multiple time frames. You have the MACD here is leveled off, and it could easily turn bullish or continue bearish. So the first day, Monday, is going to be pretty telling for Twitter, in my opinion, and that 37.60 mark is the level to watch. And what is important to remember is where the candle closes, because as you can see, it dipped below this support, but it closed right at it, and it continued to hold it as support. So make sure you are watching Twitter and watching this 37.60 mark, and I will check back in shortly to see how it played out. If you want to subscribe, ask me any questions, leave any comments, or request any videos, I'd be happy to do some. Thank you guys for watching, and have a good rest of your weekend.